Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 5th, 2021. Let's talk about most beaten down stocks. We'll start with the market update, look at the beaten down stocks, look at growth and profitable companies with a reasonable valuation. So with that, let's jump in and get started. As you look through here, the major news is from Federal Reserve. I think Federal Reserve can be our friend or our not so best friend. Right now, Federal Reserve is not a good friend. So they want to reduce the balance sheet and taper down, as you can see here. So as they taper down, that can create some issue. So that's what is going on. They want to taper down after they begin raising the interest rate here. That's a double whammy. Wall Street did not like it. That's the reason for the big drop here. And we got Nasdaq, which posted the biggest drop since February. So we got to keep a watch on this and go from there. And as we go forward here, we got all the major indices, as you can see here. Huge drop, as you can see here, in Nasdaq, S&P 500, Dow. Look, around 2 p.m. it started dropping and never stopped. And same story with Nasdaq, around 2 p.m. started dropping, and same story with the S&P 500. So at this time, I think we can slowly start picking some quality stocks here and buy them slowly. If you want to buy 100, I say buy 5 or 10, so that way you can spread out and buy as we go forward. That's the best way to invest. I've been doing this for a long time. So when the market drops big time, it's good to slowly start buying and accumulate. So many times, some of these stocks will go up so nicely after the drop stops. So with that, let's jump in here. As you look through here, we got look at the breadth, market breadth here. Advancing stocks just 14%. Declining stocks we got 82%. That's a very, very, very bad breadth here. That's why we have to be a little bit careful and pick solid companies with the nice earnings, and not the money losing companies at this time. So with that, let's jump in here and look at what sectors have done better today and what did not do well. As you can look through here, we got almost all sectors down. Look here, technology, bloodbath, down big time here, 3.3% down, and it's almost at 42-week high, as you can see here. Then we got real estate again down big time. As interest rates go higher, people may not buy buy houses, and they may not refinance. That's why this real estate market is down big time. And then you got consumer cyclical, communication services, financial services, everything is dropping. But as you can see here, drop is tapering down as you go down forward here. Basic materials, it's a little bit stronger segment, as you can see here, did not drop too much. And even consumer defensive is fared pretty okay here. So this is where what's going on. Basically risk off here. The main risky assets are going down big time, and not so risky assets are staying pretty okay. Even though they're down, they're holding some value here. So with that, what we'll do is we'll jump into Thinkorswim platform from TD Ameritrade and look at the market action and then go from there. So with that, let's jump in here and go to Thinkorswim platform. As you can scan through here, we got S&P 500. We got 1 day, 1 year chart here. Look, there is a huge drop in S&P 500 futures here. Big drop today, and even the futures is opening up to be a little bit bad day here. As you see here, we got futures opening up a little bit down here. Look, it's down about 6 points as of now here. This can change anytime, but as of now it's down 6 points after this huge big drop today, as you can see here. And then we got here next we got Nasdaq index here. Again, drop big time, as you can see here. Huge big drop here, and even the futures is opening up to be a little bit negative territory here, down 30 points or so right now. And then we got here, we got Dow Jones Industrial Average. As you can see here, same story here. Dow Jones Industrial is also down, and futures are also opening up a little bit low tomorrow morning. And look, Russell 2000 got the brunt here, down big time, a big red candle, as you can see here, and it's also opening up to a little bit down tomorrow. So this is the best time if you have some money saved up in your account. It's a good time to slowly start buying some of the quality names and hold a nice position as we go forward. So with that, let's jump in and look at a few stocks, and go from there. We'll not look at many stocks, just a handful of them, and go from there. With that, let's start with maybe a couple big cap names here. As you look through here, got Apple. Apple came down big time here, down 4 points, as you can see here. Um, let's quickly get this up here. Apple big time down, as you can see here. It's down about 4 points here. And look, RSI is 53 here. I would say wait for this to drop a little more, and then you can buy. As the RSI comes below 50, then it's a good time to buy some Apple and go from there. Microsoft, on the other hand, you can buy some right now itself. RSI is 37. That tells it's sold off pretty steep, as you can see here. At this time, you could slowly start buying Microsoft. It's got a rock solid balance sheet. Look, it's below. I think it's below its 100-day moving average. You could slowly start buying some Microsoft at these levels here. So that's below its 50-day moving average here. You could slowly start buying some of this Microsoft here. And then you got your Amazon.com. Again, it's one of the big stocks, as you all know. Amazon.com is in negative territory right now, as you can see here. And RSI is very low here, 39. It's almost sold off here. I think could slowly start buying maybe in a day or two and go from there. Amazon is in a downturn as of now, so you don't need to rush in. You could take your own time. And then finally, we got Facebook, as you can see here. Facebook is a great stock, or I should say Meta. It's a great stock here. I would say, wait for a day or two and start slowly buying some Meta. It's a great company. So with that, what we'll do is we'll look at a few more, and then we'll stop and go into our spreadsheet and take it from there. All right, so let's look at a couple more here. All right, as you look through here, we got big names here. Google, Google, as you can see here, dropped big time, dropped about 132 points. That's a huge drop in Google. Look, big drop here, dropped by $132 here. And then you got Netflix. Netflix is in a downturn right now, as you can see here, down big time. It's below its 200-day moving average here. Could be a good time to slowly start buying some, Netflix in a day or two. Then you got Nvidia down big time, as you can see here, down 16 today. And then you got AMD again down big time. So I think I would say, give it a day or two and then slowly start buying some of these great names here. They will do very nicely. So with that, let's jump in here and look at spreadsheet to see what's going on. First, we'll begin with the ETFs here to see what's going on in the ETF world. So as you can see here, we got major ETFs here. Look, we got uh, S&P 500 down big time. Even after this huge big drop in S&P 500, it's still sitting at pretty high, as you can see here. S&P 500 is just down 2.4%, from a 52-week high. So, even though people freak out, it's a big drop. I would say S&P 500 is still stone throw away from its all-time high. RSI 61, that tells you it's a little bit overbought even up here. So you can expect some more downturn in S&P 500. And if you look through Nasdaq here, which is QQQ, same story. Even after today's huge big drop here, a drop of 3.1%, still it's almost at its 52-week high here, just down 6.6% here. And as you can look through here, emerging market is down big time also. It's down nicely, as you can see here. RSI is pretty reasonable. You could slowly start buying some emerging market stocks here. And as you can look through here, Russell is weak spot, as you can see here. This one is down 11% from 52-week high. It's down big time, as you can see here. It's one of the weakest segment in the major averages. Typically, Russell goes down first, then takes other indices with it. That's what typically happens. And then you got Dow Jones Industrial Average. Dow is also down, as you can see here, but not so much. Look, even up here, Dow is almost at 50 to 52-week high here, just 1.4% down. And transportation is also down, as you can see here. So in a nutshell, don't think this sell-off is over, because stocks are almost at 52-week high for the most part, especially indices like S&P 500 and Nasdaq. I would say things might continue for a couple more days. Then we can slowly start buying our favorite stocks and go from there. So with that, let's jump in and look at category 2 here. Category 2 is all about some of these big names, mainly related to financials. As you look through here from a financial perspective, we got XLF, which is a big financial ETF here. XLF is down today 1.2%, but it's still almost at 52-week high, as you can see here. Nice volume, as you can see here. Let's also sort this quickly by volume, so we can look at this top volume on top here and go from there. All right. So let's look at the top. We got XLF. We talked through this already. It's almost at 52-week high here. There may be some more downturn here. Typically, when the interest rate fears come, financials hold up pretty nicely in the beginning. But if there is an aggressive tone from Fed, that's when even financials will start going down, like it's happening right now. And energy is a little more stronger here, did not drop too much, as you can see here. It's holding up pretty nicely. It's also overbought here, RSI 68. It's almost at its high, as you can see here. And as you can scan through here, we got Bitcoin. Bitcoin is big time down, as you can see here, 6.3% drop here. It's down 44%. If you're a Bitcoin person, you could slowly start buying some Bitcoin, even Bitcoin itself, or some stocks like Marathon, Riot, Blockchain, BT, very slowly and slowly start accumulating. And then you got real estate, as you can see here. Real estate is down big time. Even it's also almost at the 52-week high here, just down 4.5%. And let's look at our next segment here, category 4, and go from there. So categories 4 is all about high risk area. We got high risk areas here, as you can scan through. Let's quickly sort this up here. All right, so these are the high risk areas. So as you look through here from a high risk perspective, we got technology, which is one of the riskiest areas. Many times money is flowing out of technology, as you can clearly see here, and also money is flowing out of all these high risk areas. And now let's see where the money is going. Let's look at category 4, actually category 5. So if you look at the category 5 here, um, these categories are not down as much. Look, we got precious metals. Precious metals is holding up pretty well. It's up 0.1%, as you can see here. So money is flowing into some of these precious metals, and even material sector is also holding up pretty good here. These are the areas where money is flowing into slowly, and it's making its way slowly. So with that, what we'll do now is we'll go into stock market here, look at what's going on in the stock market, and go from there. All right. So from a stock perspective, what I've done is I've basically looked at Dow Jones Industrial Average to begin with. This is all the Dow stocks. So if you look through here from today, we got Salesforce.com, Mark Benioff's company, dropped big time, as you can see here. So it's down nicely here, down 8.3% in one day, big drop here. It's a good company. I would say slowly start buying in a day or two here. It's been done nicely. It's one of the bigger companies. Look, we got price to sales ratio here, which is a 9, a little bit high for the market right now, but it's not too high. And then you got Microsoft here. Microsoft also dropped, as you can see here, down 3.8% with a nice volume. Look, Microsoft has got a little bit higher price to sales ratio here, but it's very much justifiable. I think even this one we can buy slowly. Next is Cisco, again a big cap name, as many of you know. Cisco also dropped slightly here. Even up here, I think Cisco is at $60, as you can see here. So I would say, Cisco is a good company. They're making some nice headway here. We could start looking at Cisco also as we go forward. Cisco price to sales ratio is not too much here. It's low, as you can see here. Maybe in a day or two, we can start slowly buying some Cisco. Only problem is Cisco is even up here. It has got a high RSI that tells you it's almost at its top here. I would say wait for a couple more days. Let this come down, then we can buy. Right now it's a little high for me. And then got few more, as you can see here. We got United Health and Nike. Both are great companies. I think we should be looking at companies like these here. Look, Nike has got 6 as the price to sales ratio. United Health is very cheap from a valuation perspective, just 2 price to sales ratio. We could look at those companies and buy them slowly as we go forward. And as you can see here, we got a few areas like Apple, Align, all came down nicely here. You could look at some of those names here and start buying slowly. And what I will do now is I will quickly look at low price to sales names here. Let's say we want price to sales less less than say 10. So we can even let's say 10 for now. We can avoid some high price to sales names. Looks like I did more than, let's say less than here. All right, so now we'll get all the price to sales ratio less than 10. So look at some of these low price to sales names here. As you look through here, we got few stocks which are done nicely. Even up here, look at these sectors here. These stocks have done pretty okay. They're holding up pretty nicely. Even though there is a Fed induced slowdown, look, these stocks are holding up pretty nicely today. Many of them have gone up, as you can see here. So what we'll also do next is we'll look at the better companies in this list here and go from there. Let me um, collapse some of these things here so we can look at some of these charts and go from there. So as you look through here, what I've done is I've also looked at some of these growth and statistics here. And as you look through here, we got CRM Salesforce.com on top here. It's got a very nice financial score from Morningstar, grade A here. Growth score is grade B. Profit score is grade C. Compared to industry, it's doing pretty well from a ranking perspective. It gets a rank 3. From a industry profitability perspective, rank 1 from a growth, rank 4 from a quality perspective. Valuation is rank 3, not too bad. So I would say, companies like this one with nice grade, you can go after. But companies with the not so great grade, for example, as you scan through here, we got Walmart here, or actually MMM here. Let's look at the next one here. I think let's look at Walmart here. So Walmart, as you can see, it did not get a good grade here from a industry profit and growth perspective. I think it's struggling a little bit. I would probably avoid names like Walmart. Let it come down more, mainly because its ranking is not good. From an industry profit rank, it's high rank. High rank is not good. We need a low rank here. I would probably avoid Walmart for now. Let it come down a little more, and then I would go into Walmart. So with that, just by looking at this industry and Morningstar grades, you can get a good idea what's going well and what's not going well. Look, I like Coca-Cola here. As you scan through Coca-Cola, as you see here, it's doing pretty well here. Financial, they get an A here. Profitability, they get an A here. From a scoring perspective, it's doing pretty well. You could just swap into names like that also and go from there. So with that, next what we'll do is we'll look at a few more names here. Let's look at Nasdaq 100 to begin with. Let's click on Nasdaq 100 here. Let's unselect. All right, so now we get all the Nasdaq 100 names here, and it's also, as you can see, let's sort this by 1 day drop here. All right, let's give it a minute. All right, so now we got our Nasdaq names here. As you look through Nasdaq, look what's going on here. We got HubSpot on the top here. It's a high octane stock, as many of you know. Look, price to sales ratio is 20. It's dropping big time here. 1 day 9%, 5 day 22%. It's a great stock. I love HubSpot here. I think we could take advantage, and in a day or two, we can slowly start buying some HubSpot. It's a great customer relationship management company. I think it's a huge drop in HubSpot here, given their price to sales ratio is high. It's 20. Company, as you can see here, is not making money right now. Negative net margin. Wall Street does not like negative net margin companies right now, especially with the high valuation. Next one is Cloudflare. Many of you know this company. It's again a high octane stock here. Look, this one has got a 56 as a price to sales ratio. That's why it's not doing well. It's down big time here. Look, 5 day, 10 day, 1 month, all down big time. Then another high octane stock, I think many of you know this, MongoDB. This stock went up to stratosphere last year, and now it's coming down, as you can see here. All these high momentum stocks with the high price to sales ratio, they're all coming down nicely. The moment a momentum stock loses momentum, it kind of comes down pretty quickly. So that's what is going on here. And then got few more here. We got Datadog and Zscaler, all high momentum stocks, as you can see here, coming down big time. So now what we want to do is we want to look at low price to sales ratio and take it from there. Let's do here. Let's go and say we want price to sales ratio less than, say, 10. Let's start with 10 here, or less than 15. We'll start with 15 here. All right, so now we are getting price to sales less than 15. And we could also say we want net margin to be positive, so that we look at some of these net margin positive companies. All right, now we are going to get some good names here. We could start looking at some of these names slowly and go from there. And we got here, as you can see, a price to sales ratio less than 15. Let's actually say less than 10, so that way, we are a little more safer. We get a smaller list here. All right. So all these names have got price to sales ratio less than 10. As you scan through here, they got a positive gross margin that tells you, these companies are really making money at the end of the day. Some companies have got a little bit higher, let's see here, higher debt here, as you can see here. If you're not comfortable with high debt, you can ignore such candidates here, and go after the ones with the lower debt. For if I just say low debt here, let's go here and say low debt. All right, so now we're getting all the low debt candidates, as you can see here. You could look at some of these candidates here. These companies are making money, and the price to sales ratio less than 10 for all these folks. And many of these have got much lower price to sales ratio, as you can see here. And what we can also do now is we can look at the Morningstar grade and see what's going on here. So look, we should typically look at companies with nice grade A here on the financials, and hopefully nice growth grade here. Look, we got CRM, which came up here. It's got a 9 as a price to sales ratio. We could look at that one too. And look, we got a couple more here. We got Lululemon. Again, it's a nice grade here. Financials A, growth B, profitability A here. From an industry perspective, it's doing very well, as you can see here. You could pick up such names here. We got Regeneron, again a great one here, and even Pinterest is a good one. You could slowly buy, even though it's dropped big time, as you can see here. And we could look at such names here and slowly buy some of those names as they come down, given they got rock solid financials, as you can see here. um, and we got few more as we go down here. We got Zebra, which is one of my favorite, and we got ALGM, Thermo Fisher, again a great stock here. Pool Corp is a good one to slowly buy. So you could look at such names here and slowly buy them into this weakness and go from there. So next, what we'll do is we'll look at S&P 500 and see what stocks we can buy from S&P 500. So let's go on S&P 500 here, and as you can see here, S&P 500 perspective. Let's also sort this quickly. All right, so we got stocks that are dropped big time in 5 day here. We got CRM again on top. So let's do something similar here. Let's say we want we want price to sales ratio. We already have the filter here. That's good. Let's hide all these things and look at some of this grade here. Look, some of these names you could still start buying here slowly. Salesforce is one. We got Zebra, we got Facebook or Meta. Look at Meta here. Nice rock solid financials, nice growth, profitability C right now. And we got TTWO. It's also a good company. You could buy that one too. You could look at some of these names here. Keep watching the price to sales ratio here. If it is a little bit high, you could wait for them to come down a little bit. But all these stocks have got a little bit lower price to sales ratio. Some have got very low, as you can see here. Insight is a good one. Accenture is again a great stock. You could slowly buy some Accenture as it drops further. So with that, I think these are some good ones you could slowly start buying and take advantage, and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.